have with us Dnyanada Kulkarni, Chief Financial Market Analyst at Century Financial. Welcome with us at CNBC Arabia. Can you tell us more about what you observed during this session? We have a disparity in the performance of the equities in the two markets in this trading session. The banks in the Dubai market, are they still pressuring the financial sector still pressuring the market?
Hi, thank you very much for having me. There is a divergence in the performance of stocks between Dubai and Abu Dhabi. If you look at Dubai, it settled somewhere around 6,012. And the reason the losses were capped is because of the presence of the 50-day moving average at 5,986 level. And that has acted as a strong support for the markets, from which the markets have not fallen further beyond that. Whereas in Abu Dhabi, what we have seen is the ADX General Index has taken a bit of a fall and closed below the 50 and the 100-day moving average. So roughly it is at 10,060, whereas those two levels are present at 10,082 and 10,086 levels. So that acted as a strong resistance, which has prevented the market from going up in Abu Dhabi.
Let us talk about the performance of the companies. We have also a divergence in the profits of the banks for this quarter. The idea of the interest revenues and the banks are being affected by it. And second, increasing the income tax on these banks and these companies. How can the banks compensate the revenues that will be less, and they are really less for Q3?
The net interest margins that were expected to decline, they haven't fallen as much as expected, but obviously with the Fed cutting interest rates, we saw 125 basis point rate cut happen recently, and there's a possibility that a further reduction will happen before the year end. So that could pressure the net interest margins to some extent, but because the Fed is taking a slow and steady pace and not doing it all at once, maybe if it continues at a measured pace, the impact will not be too bad. And if interest rates are coming lower in the economy because of the currency peg between the dirham and the dollar, we might expect interest rates in the UAE also to decline, which could support lending activity. More and more people will be able to take on loans at more affordable rates. And because of the strong business environment and corporate climate in the UAE, we have seen strong lending across the retail and corporate sector. So that could compensate for some of the losses.
During this week, we are awaiting the earnings of the biggest real estate company in the UAE, which is Amar Properties. What are your expectations for Amar Properties, and from which we can get to know the performance of the real estate sector in Dubai?
So if you look at the second quarter results, we saw stellar growth on the year-on-year numbers for both the top line and the bottom line. But on a quarter-on-quarter basis, there was a slight slowdown. Maybe because in the Q2, the number of handovers that took place relative to Q1 had slowed down. But moving forward into Q3, we expect that activity to pick up, especially because the seasonal lull that we saw in the last quarter is now expected to go away. More and more projects are completing handover and they're nearing their completion rate. So the revenue visibility is strong. We're expecting maybe the third quarter revenue of Amar Properties could come around 5.7 billion. Which is maybe a 10% quarter-on-quarter growth. And maybe the bottom line could increase to 3.7 billion dirhams, which could also be maybe a 12% quarter-on-quarter growth. So the projections look very optimistic.
How do you view the lack of liquidity and not having big liquidity in the UAE markets as before? Do we have perhaps a version for this markets, or the investors are not pumping more liquidity in the UAE market, especially that always in Dubai, the minimum was 600 million dirhams. However, today we are having trading below these levels. Even in Abu Dhabi, we were close to the 2 billion dirhams. However, at the time being, we are below the 2 billion dirhams.
So compared to third quarter, where net foreign interest, the buyers from foreign institutional investors, it reached $798 million in ADX equities and $615 million in Dubai stocks. Compared to that, we've seen a slight slowdown at present, but that has mainly got to do with the ongoing earnings season, and also maybe market participants are waiting for how the US-China trade talks progress. And after the recent FOMC meeting that happened, the Fed struck a less dovish tone than expected. So because of these factors, maybe the trading and investment activity has slowed down slightly. And also we saw a round of profit booking across both markets, because of which both DFM and ADX are roughly 3.5% below their recent highs. So this is more of a normalization cycle, but it is expected to pick up once the overall macroeconomic and fundamental scenario settles and becomes more clear to investors.
Thank you, Dnyanada Kulkarni, Chief Financial Market Analyst at Century Financial.
Thank you very much.